Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Wednesday, February the 8th, 2017, and this is the Daily Report for Gold and Silver. Now, for a fifth consecutive day, we do have the characteristics of a rally in gold, with gold trading up now about $6.70 to close today at $1242.80. That, of course, is based upon most active April's futures contract. We have seen this market in consistent rally mode now since it hit a bottom back in the middle of December. And today we did get some insights into why that has been happening, and also professional accumulation of long gold positions. We'll try to touch upon that today, but we do have a continuation of gold in rally mode, closing up about 0.5% on the day. Silver pricing also higher, but not nearly as high in terms of a percentage gain, only about 0.1%, closing at $17.75. And as I said, up about 2 cents on the day. So traders, absolutely no doubt a superlative strong move in the market today. Market's still actually actively trading. We are obviously now into the afternoon session, and we are trading up about $7.80 at 1243.90. Net change now about 0.6%. What to me is most impressive is the fact that we are seeing, in essence, a close above what I believe to be an area that we needed to look at for potential resistance. And that potential resistance, as you will see in a second, actually has a correlative not only to the fib extension, which created this 61% extension, but to the former retracement. Of course, we'll see that when we go ahead and compress the chart. But the fact of the matter is we are above that in active trading, and we have moved our stops now to below 1220. We've got 1230, which accounts for the lows of today and yesterday, and now 1220 accounting for the low 3 days ago. And that, traders, is the best place, I believe, to put a stop on a longer term basis, is at least accounting for the last 3 days and putting it below the lowest low over that trading period or trading cycle. Now, with that in mind, I want to go ahead and compress this chart because I noticed some interesting correlations, and especially a Fibonacci harmonics between our extension and the retracement. Now, I've added a simple retracement starting from these highs at 1377, taking them down to the low of the market that came in, really, as we've talked about, mid-December at 1123. When we do that, and you can see these hash marks here, 78%, 61, 50, 38, and 23. And here's what's interesting. First harmonic, 38% retracement, 1219, and that lines up quite eloquently with this first extension that we have at 1220. We have a 38%. This would be our 50%, and then our 61% here. Now, in terms of that, 61 at 1242, and that really doesn't line up with anything because we have a 50% at 1249. However, our 61% retracement, and this is the harmonics that I find most interesting, but our 61% retracement and our 1-to-1% extension line up precisely. And that's the kind of harmonics that I look for. In other words, we've got two different fib studies, one an extension, one a retracement, both really alluding to the very, very same price point. It is for that reason that I believe that there is a high likelihood that we could in fact see this market trade to that level, the level of about 1280 per ounce. Now, we've gone ahead and raised our stops below 1220. And so if the market does begin to backfill, we've already locked in some profits. Obviously, the next stop placement that we want to look for is going to be to put it below the current pricing, which is 1242, and that of course would be based upon the market continuing to rise in value as it approaches our secondary target, and that would be at 1280. We do have a target which sits at around 1250, and I believe that that is highly achievable at this point, but we're only now about $6 away from that price point. So we're very, very close to hitting that. We want to see how that reacts. We want to be cautious and move our stops up selectively. But at this point, it's not so much about making or pulling a profit on this trade. It's now about maximizing the profit dollars we get on this trade. In other markets that we look at, we did get a mixed bag in U.S. equities today, with the Dow Jones Industrial Average closing above 20,000 still, but closing down about 35 points on the day. As I said, a fractional sell-off of about 0.2%. But the mixed bag really comes because when we look at the NASDAQ, that is trading higher today, up about 0.3% to close at 5191, and that is the NASDAQ 100 E-mini. And then the Standard & Poor's also closing higher, up about 1.5 points at 2294, both in record territory. Even with a mixed bag in U.S. equities markets today, the one thing that we can say overall is that tech stocks have been outperforming really any of the other indexes or any of the other sectors, I should say. The NASDAQ, as seen here with the 100 E-mini, is absolutely closed at a new all-time record high. You can see that right here. That is on our daily charts. And then after really breaking above 5160 over these last couple of days, we've absolutely seen a surge in the market, with today's activity taking it up about 1/3%, and that in relationship to a fractionally lower Dow Jones Industrial Average and a fractionally lower Standard & Poor's is quite impressive, to say the least. And so, traders, as far as the dollar goes, I'm very curious to see what happens over the next couple of days, because as you know, we have been extremely bearish. We correctly predicted this market would fall. We also correctly predicted where it would find potential support, which was based upon a 38% retracement at about 99 on the dollar index. Now, looking back at it, we can absolutely see that eloquently highlighted an area in which the market would find some headwinds, some tailwinds to give it some upward momentum. We've had our first real down day. It is fractionally lower, but it is a red candle nonetheless. And we also have identified a minor level of resistance that comes in at about 100.86, market trading at about 119. It will be interesting to see. My best sense is right now that we saw the market decline. We have a nice little kind of a pseudo rally here. I think that will terminate roughly at this price point, 186, and then I think it will return to this downward trend that's been in existence really since about mid-December. And my target, if in fact that happens, would be at around 97 3/4 based upon this 50% retracement in the dollar index. Traders, as you know, we are currently long a gold position. This, of course, is Basis Most Active April's futures contract at approximately 1203. Yesterday, we sent out a special trade alert recommending that all subscribers raise stops to have them now below 1220 per ounce. Market today trading at roughly 1242, 1243 after seeing a nice rise in the market today of about $7. Our recommendation is obviously to maintain our current long position in gold and to maintain our current stop level. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.